Welcome to another episode of Kiss My Assets.
The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
Hello everyone, I'm Heidi Butler, and welcome to our Q2 2023 Investor Livestream. Questions will be answered at the end of the presentation. In considering the performance information discussed today, prospective investors should bear in mind that past performance is no guarantee of future results, and that there can be no assurance that projects will achieve projected results. In addition, actual future conditions may require actions that differ from those contemplated at this time, and prospective investors are cautioned not to place undue reliance on these projections. This presentation includes certain non-GAAP financial measures. Certain statements, such as believes, anticipates, plans, intends, expects, target, preferred, and words of similar import constitute forward-looking statements. Such forward-looking statements involve known and unknown risks, uncertainties, and other factors that may cause the actual results, performance, or achievements to be materially different from any future results, performance, or achievements expressed or implied by such forward-looking statements. On this live stream, we are joined by John Kobierowski, co-founder and president of Real Estate, and Jamison and Manwaring, co-founder and CEO. Before we discuss the current market, we'd like to cover some important items. Distributions are available on the 10th of each month and are found under the cash available on your investor dashboard. If you're interested in using your cash balance to invest in one of our open offerings, contact Investor Relations. It's important for us to connect with our investors. We want to keep you informed on the important items in the news, the progress of our projects, and investor events. You can follow us on any of your preferred social media platforms to stay up to date on what's happening in Neighborhood Ventures. Our podcast, Kiss My Assets, is one of our favorite ways to discuss multifamily trends and delve into other relevant topics that we feel are important to our investors. We really enjoy having our investors come into the studio and share their stories with us. If you'd be interested in joining us for an episode of Investor Stories, reach out to Investor Relations. Now I'll turn it over to Jamison.
Hello, everyone, and thank you for joining us. Last quarter, we announced the launch of NV REIT, an SEC-qualified Reg A offering. Since our last live stream, NV REIT purchased Venture Williams, its first acquisition. This purchase was completed at the end of February, and all Venture Williams investors received their principal plus 12% preferred annual return. Venture Williams is a stabilized cash-flowing property, which means NV REIT investors received their first distribution in April. NV REIT is currently distributing 5% annually. Each quarter, we will update the value of NV REIT shares. This is done by taking the total value of the investments held by the REIT and dividing this by the number of shares outstanding. We will publish the first updated net asset value share price at the end of next quarter. We'll discuss this in more detail in the next live stream. NV REIT gives you the opportunity to invest in a diversified portfolio of multifamily properties. All the properties held by NV REIT will be stabilized cash flowing assets. We will invest a smaller portion of our capital into developing properties like our current project, Venture on 17th. Venture on 17th is open to Arizona residents and offers a 12% preferred annual return. This project reached its target raise of $1.5 million in the first 10 hours. We are so thrilled to see that you are as excited as we are about this project. Look at what you accomplished. Venture on 17th has now raised $2.4 million from 189 investors. This project is already stabilized and cash flowing, and distributions are expected to begin 30 to 60 days after we close on the property. Both Venture on 17th and NV REIT are open for investing today with a minimum investment of $1,000. You can find the offering pages on our website and place your investment there, or reach out to us if you have additional questions. Now I will turn it over to John to discuss what we're seeing in the multifamily market.
Thanks, Jamison. Most of you have seen the recent headlines raising concerns about the commercial real estate industry. Nationwide, the commercial real estate market is feeling pressure from higher interest rates and tighter credit conditions. The largest two players in the commercial real estate market, Blackstone and Brookfield, have reported concerning declines in earnings due to a weakening demand for commercial real estate property, specifically the office market. Workers are not returning to the office. Due to the recent trend of work from home and hybrid schedules, which is accelerated by the 2020 pandemic, companies have less need for office space. Experts are signaling that this trend is likely to continue. We feel it is important to make it clear to our investors that we are a multifamily company. Our passion and our expertise are in multifamily. Launching our 14th successful offering, growing our fund, and adding the NV REIT, we feel confident in the multifamily market today and in the future, especially in Arizona and the Sun Belt region of the U.S. It's clear by the number of millennials preferring to be renters forever and the current state of the housing market, demand for multifamily real estate remains strong. These renters are choosing quality of life when considering their housing options. Properties that allow them flexibility, that are close to employment centers, that are walkable to points of interest, and offer luxury shared amenities. Arizona remains the standout in the multifamily market. We have sunny weather, reasonable taxes, strong population growth, and lower overall cost of living. We are one of the few markets with predictable multifamily growth. Arizona's booming job market has attracted a staggering number of diverse and highly skilled workers, with more than 200,000 new jobs created over the past 2 years. Phoenix welcomed over 277,000 new residents over the past 5 years. It's the nation's second best market for its sheer immigration. Maricopa County has attracted over 300 new residents a day. That's 111,000 people a year, helping it to retain its top spot as the nation's fastest growing county. With the large influx of new people to Arizona, our housing supply can't keep up with the growing population's needs. We are looking at a shortage of around 270,000 housing units over the next 10 years. It's unlikely we can build enough to keep up. The demand for multifamily properties remains just that, strong. Now let me shift to our current projects. 3 of our projects are currently under renovation. First is Venture on 12th Place. The pool area and courtyard have seen many changes this month. We added a new autofill system to the pool and completely renovated it, including new tile, plaster, and a cool deck. A new contemporary wave mural has been painted on the longest wall, adding a pop of color to the pool area. Artificial turf and gray landscape rocks have been added to the landscaping areas and agave plants added to the planters. Tenant backyards have been upgraded, and the courtyards will be finished with the addition of shade sails and cafe lights. The first 12 of the 30 units have been completed and turned over to our property management company to start leasing. We expect Venture on 12th Place to be cash flowing in Q3 of this year. Flagstaff's Venture on 66 will be operating as a vacation rental and is nearing completion. 6 units are fully renovated, and we are expecting our first guests this week. 8 more units will be delivered by the end of the month, and the final 10 units are expected to be finished by mid-May. We expect Venture on 66 to reach the cash flowing stage towards the beginning of Q3. Venture on Broadway, our first and only retail project, is almost at the finish line. Dunkin has finished their build-out, and they are in the process of adding tables, counters, and interior signage. The drive-thru is nearly completed, and we are just waiting for the order board to be installed. APS has turned on power, and we expect Dunkin to be operational within a week. We have 2 operating tenants with fully executed leases, Burger Rush and Dunkin' Donuts. Our commercial leasing team is in the process of selecting a tenant for the 3rd space. We anticipate selling Venture on Broadway later this year. Jamison?
Venture on Central is 100% occupied. Before renovations, the average rent was $1,000 per unit. Now the current average rent is $1,850 per unit, while the average market rent is $2,300 per unit. When a property is being stabilized, the first several units are typically leased below the market rate. We expect that units will be brought up to the market rate as tenant leases are renewed this coming year. Because of this, we expect Venture on Central to be cash flowing later this year. Venture on Eldon began cash flowing and paying distributions in February and is currently 94% occupied. The current average rent is $1,900, more than double the original average rent. Venture on Mountain View is 96% occupied. The units are leasing near the average market rate of $1,300, with the current average rate at $1,250 per unit. At Venture on Country Club, we continue to work with the city for the conversion of the property into multifamily. We expect the rezoning process to be completed by this summer. In the interim, Venture on Country Club continues to perform well as a vacation rental, with a current average rent of $1,717 per unit during the first quarter. Each of our cash flowing properties pays investors a 6% annual distribution. The Neighborhood Ventures Fund is currently distributing 5% annually. We expect the fund to be fully liquidated by the end of 2025. As the properties the fund is invested in are sold, investors receive back a portion of their principal investment. Investors always have the option of reinvesting these funds into NV REIT or an open project to continue earning a preferred annual return. And now we'll turn it back to Heidi.
Thank you so much, Jamison and John. We've got quite a few questions that have come in. The first one is there still time to invest in Venture on 17th?
Good question. And good news is it is still open to invest. We have a max investment of $3 million is what we're raising. And so I think we're just about 80% funded. We did hit our target in the first 10 hours, which means that the project is going to move forward. That's what we want to hit as our kind of our green light or yellow light. So we hit that in the first 10 hours. And now as we kind of round out the rest of the fundraising, we can raise up to $3 million. So invest in that now. We'll probably be closing up that investment in the next week or two, but it is open for investing now.
The next question I have is, when will the REIT purchase another property?
I can touch on this and John can jump in too. We expect later this year, we will probably purchase another property. It depends on how capital continues to come into the REIT, and we're doing a great job. The team's doing a great job on fundraising, and everybody who's on the call who has invested has and supported the REIT has driven that. That's what allowed us to make the first purchase, Venture on Williams. And the big thing now is the REIT is open to investors nationally. So most of our investors initially were in Arizona because you had to be an Arizona resident to invest with us. But now we're open nationally. So we're doing a lot of outreach to investors nationally. And our team is busy talking with them, having introductory phone calls, doing events, Zoom meetings. And we're seeing a lot of folks nationally starting to invest as well. So it's that's what will dictate when we buy our next project. As we have capital come in, then we'll take a look at it, and then we'll make a determination what asset that next one will be. But it may be later this year, it might be early next year. It will depend.
Well, there's also one other component. We want to buy stabilized assets.
Right.
So we're trying to buy properties that are running smoothly right now. That's a big part of it.
Yep.
Okay, so then my next question is, when is the grand opening for Broadway going to be?
All right, so Broadway's been a lot of fun. We'll call it the COVID property because we everything that could have affected us with COVID affected us. It looks fantastic. I saw it this weekend. Dunkin' Donuts is right there. They are. I think they're opening. Might even be early next week. But it looks fantastic. The question is when are we could have our grand opening?
I don't, and Dunkin' might do a grand opening. I don't know how they do that.
I think Burger Rush is kind of doing another soft reopening. Dunkin's doing something for themselves, and then we're going to do something.
Yeah.
Heather was going to plan that. So to be fair to the question, we finally got electricity turned on, which was big. Won't believe the problems. APS actually told us they could not find wire to turn on the property. That was interesting. So we had a floating schedule and we're going to do it. But I think you remember when Heather said
so we wanted to let Dunkin' get open. So the idea with the event is we're going to do some sort of event in the third space before we have somebody move in there.
Right.
And we want to be able to have tokens to go next door to Dunkin' and get a coffee or a donut. So we want to make sure they get opened up. Once they get opened up, we should be announcing that. So I'd say probably sometime in the next several weeks, we'll have our event there. And we look forward to having folks come see the space. And then I'd also encourage you to go by there before. So I think, as John mentioned, Dunkin' looks like they're opening. Go by there, support them. I've become a Burger Rush fan, especially their peanut butter milkshake too frequently. So you can go by. The property's looking excellent, and it'll be really fun to finally have Dunkin' open up.
Wonderful. The next question I have is, can I reinvest my distributions into the REIT?
Great question. And yes, we have a lot of investors who are doing that already. If you reach out to your investor relations team, Heather can help you get that set up. The great thing is we set up the REIT with $100 share price. And so once you have $100 saved up from distributions, you can buy another share. And that is how you can compound your earnings and really grow your wealth with real estate, is to reinvest it. And so that was one of the reasons why we set it up at $100 a share. Our other projects, the Arizona projects, are $1,000 a share. So you can only buy an additional share once you have 1,000. But the REIT we set up different for that purpose, and would love to have you set up that auto invest your distributions into more shares.
Wonderful. I have another question here about the REIT. Can you share how much fundraising has been invested in the REIT?
We don't put that out publicly because as we're in the early days and raising the funds, it's something that we have our own internal goals, and there's some things we don't want to put out publicly for multitude of reasons. There are certain qualifications we have to do since the SEC regulates us, that we will put those out on a more annual basis or semi-annual basis. You'll be able to see how much has been raised. Our goal is to bring in a couple hundred new investors on a monthly basis. And then it takes folks a little bit of time, a few weeks or a few months before they want to invest. And I can say right now, we're seeing a lot of activity. We're hitting those goals where we're bringing in a couple hundred folks now who are interested in investing in the REIT. And that's been fun to see that interest nationally into what we're doing. So those updates we will do more periodically. But I can say we've raised in the millions, several million. And we also have over 200 investors now in the REIT. So
and we're on schedule.
And we're hitting our
That's
our
exactly the
goals.
most important thing. We're doing exactly what we thought we were going to do.
We have a question here. Can you elaborate a little bit more about the timeline for permits and zoning for Country Club?
Sure. So that's been, I just had a conversation yesterday with our architect and with our attorneys today. We're on schedule now to do our full submittal to the city of Mesa, hopefully next week or the week after. And what that means is we give everything to the city. They come back with a couple questions, a little bit back and forth. And I think we're on schedule now with the way that the city requires us to have it on a couple of agendas for a couple of meetings with city council. We're shooting for sometime this summer. It depends on I forgot how their schedule goes, how many meetings they have in a month. But that's the schedule we're on. We've got everything done. Architects did a great job now, and we're back on track.
Are there any upcoming open house events? I know we kind of touched on this with Broadway. Any other properties we should be expecting?
It's actually a busy time because we're completing a lot of projects at the same time. So the Broadway one, I think, will probably be the first one, but soon thereafter is Venture on 12th, which is Osborne and 12th. We're starting to lease up there now. Our John and the construction team have done an excellent job getting that project to look.
It looks really nice, guys. I saw a picture taken at night and another one during the day. It is beautiful. Shade sails, cafe lights, new pool area. I mean, it looks perfect. And it's we would like to avoid the July mid-July open house, but we also want to get a lot of the final finishing touches completed. So I think that one's right behind Broadway. And then we will probably have another open house in Flagstaff over the summer at Venture on Route 66. We like to do that, and we did it last year at Eldon because it's nice to have a little getaway, get out of the heat, and drive up there on a weekend. So we probably will do that, in June or July at Route 66. Route 66 is also leasing. As we mentioned in the call, we expect our first guest this week, so it's really exciting. And I think that project's going to do really well up there. I just did some searches again on short-term rentals in Flagstaff, and there are not many up there. So that's why we decided to run this as a vacation rental. The units look great. The location is great. And we get reminded of that here in a couple months, how nice it is to get out of the Phoenix in the middle of the summer and go up to Flagstaff. I know John's been doing it for years. The Sunday is going to be 105 here. Yeah. So we're getting there. And then also, if you want to throw it out there, the way we're buying Venture on 17th, we're not doing a bunch of work to it. We could probably have our official kind of come out, take a good look at it. If we have a vacant unit, get us in there.
That's a good point. Yeah.
Probably this, probably following 66.
So we're going to have quite a few events now. There's a little bit of a backlog, and so we may have an event a month here coming up, and looking forward to that.
Well, the Route 66 one brings up another question we have here. You mentioned that it's available for rent, for short-term rentals. One investor would like to go stay there. How would they find the property, and how can they go stay there?
So we will have a website for returning repeat guests where they can book directly on the to the property. We also publish it and make it available on Airbnb and the booking.com family, which is Expedia, Priceline, all of those. So there's a lot of distribution to get folks who are wanting to stay up there for them to find us. We'll send that out. I don't have it offhand. I think it's, I don't want to get it wrong. So we'll send that out to you with a link. If you want to send info at neighborhood.ventures, we can send you the link and you can reserve directly on our site. You can also find it on Airbnb, but the benefit of booking directly with us is you don't have to pay the 8% fee to Airbnb. So it book direct with us makes more sense. And we can send you that. It's something like venture at route66.com, but don't hold me to it. Let me double check.
Yeah, we'll send you it directly. I have another question here. Is there risk of any of the properties needing their loans to be rolled over at a higher interest rate prior to the projected sale date? Or if they can't be sold on the planned timetable, will the loans need to be rolled over?
That's, if you watch the news right now, that's always the big concern about real estate loans rolling over. Luckily we anticipated some of this happening, and we structured a lot of our properties with longer term loans now. And then we have some of them that are coming due, but because we are getting higher rents, the properties are full, everything's going well, we don't anticipate any problems at all and be able to put permanent loans on it. Might be a little contrary to what most people understand right now. The 10-year treasury is dropping a bit, and that's what a lot of the commercial loans are based off of. So we could put Fannie and Freddie loans on a property, for example, that are based off the 10-year. And right now, those are actually more affordable. They're somewhere around 5.25, where a single family home loan's 6.5, 6.8. So we're still in a very good place on all the properties. And
as John mentioned in the scripted section that we already went over, commercial real estate is having some challenges, particularly the office space. And then we also know the banks, regional banks who often lend to commercial real estate, are also having challenges. The one thing that I've learned and John's taught me is that housing has more of a backstop. And the ultimate backstop is that the government and Fannie and Freddie, who support the government, HUD, they offer loans for multifamily, but they don't offer loans for office buildings. So an office building has to rely more on a regional bank and their liquidity and their ability to lend. And that's one of the other reasons why we've always liked multifamily. There's more capital available on the debt side. And that's kind of the backstop, that even if some of the banks stop lending for other commercial real estate, multifamily has a lot more options. And we're in good position on all of our projects. We look at it all the time. This is what John and I spend most of our time in, is managing our assets, ensuring that we're getting good income coming in from them, that our property managers are managing them well, that people are paying rent. We look at that basically every day. And we see metrics and we see red flags if that's happening. Good thing is our projects are, they're, as you see, they're basically full occupancy. 95% is kind of considered full occupancy in the Phoenix market, which is very, very high. And that allows you to pay your mortgage, pay the debts, or pay the other expenses, and then also have profits left over to send to investors, which we do. And then the projects that we're in the process of getting cash flowing, so Broadway, 12th, Route 66, they're also well positioned. So we don't have kind of a cliff of debt problems that we have to deal with, because we plan longer term when we set those up, and gives us time to get them leased up, to get them start generating cash flow. And so there isn't a problem in our portfolio, but it's something we watch all the time because it's a changing market. We don't take it lightly, and we're in good condition right now.
We have properties that are running full. We have rents that are going up. We have lower loan to value. We have great banking relationships. That's really sums it up.
We have a couple of questions here, a little bit about the REIT. Can I continually buy shares at any time into the REIT? And do I have to purchase $1,000 in shares before I can start doing $100 share price?
Yeah, so good question. The big reason why we created the REIT, there was a few of them, but one of them was to allow people to invest at any time. So you're able to save some money, put some money aside, and immediately invest it rather than wait for a next project, because we tend to do 4 or 5 projects a year, but you may have some money you want to invest, some capital you want to invest in the interim. So the REIT is available to invest at any time. So that's the great part about it. And we structured it that way. Your first investment has to be at least $1,000. So that's kind of the threshold to become an investor. Save that first $1,000. Then after you've saved that, now you can invest in $100 increments.
Perfect. John, maybe if you want to start with this one, what property do you think will sell next?
That's a good question. Well, I mean, I think we're probably there with Broadway. Once we got the construction done, and we're looking at getting a third tenant in there. In my mind, I think we're at the right price. That property's not going to get any better over time once we lease up that third space. So that's probably the first one.
And I think one thing just to dig into a little bit, those are long-term 10-year leases.
Right.
So it's all built in once we get that third tenant where
nothing else changes over time. I mean, there's bumps in rents, but not that much. They're just market bumps. So anyway, I think that's probably our next one. And to be fair to the whole process, we get offers or get questions from brokers at ABI all the time about projects and what our number is and what we'd sell. You know, if someone comes to us with an offer that we think would hit our numbers and make it work for our investors and for the whole process, we always look at that. So we've had a couple times where we've gotten very close on properties we didn't think we'd sell right away, but we had a random off-market offer come to us. So we could be surprised by having somebody come to us who's in exchange and has to buy something, and we'd sell something sooner.
Yeah, and there's times that are better to sell and times that are not as good to sell. And this is kind of my view. Right now, we're looking to buy because there's some opportunities there. I think Venture on 17 is a good opportunity for us. Right now is probably not the best time to sell unless we get an off-market offer, because interest rates are a little higher, and that ends up being a big factor when somebody buys a building is what's their interest rate going to be. And as you know, and the Fed continues to talk about potentially raising rates, but that's kind of coming to an end. The raising rates conversations right now, it's do we just leave them for a while, and then we see rates and the market more stabilized, and then it could be a better time to sell. So we want to position all of our assets so that we don't have to sell them until we're ready to, because they have low loan to value, they're cash flowing, they have good occupancy, our operations are going well, and then if as that's happening, you don't have to sell a building in a poor time. You know, we have the old adage, buy low, sell high is how you do well in investing. But a lot of times people end up buying high, selling low, because they are kind of put in a corner, they're forced to, and we do all we can to not do that, to sell at the right time. So and the great thing is our properties are paying distributions to investors. So a lot of our investors, when we do sell a building, they're like, wait a second, why are we selling it? I'm getting these great returns. So we will sell the buildings at the right time, but you know, we have good buildings that are cash flowing right now, and so I think you mentioned Broadway.
Yeah, I just bought Broadway. If you look at our chart, it's in stabilization mode right now.
Right.
So that's probably the one that's key to be sold as early as this year sometime.
Yeah.
Great. A question from one of our national investors. Do you expect that any future projects will be available to national investors, or will national investors be limited to NB REIT going forward?
Oh, good question. So Right now, our investors on our individual projects have to be Arizona residents. We expect that we can include investors outside of Arizona if they're accredited investors at some point in the next few months. So there's some reasons why that I don't need to get into, but if you're somebody who's outside of Arizona, the great thing is now you can invest in our projects via the REIT, and that's going to be open to anyone of any income level. And then if you're an Arizona resident, there's an added bonus that you can invest in our individual projects right now too, because we work under the Arizona interest rate crowdfunding laws for those individual projects. So things can evolve over time. The laws can change and open some things up, but we're excited that we at least can now have the REIT that's open to everyone nationally.
Wonderful. We had another question about the REIT. Will the distribution for the REIT be on the original $100 moving forward? Or if the price per share is $110, does the distribution change to be based on the new price?
No, that's a pretty thoughtful question. I'm going to have to think about that, but right now we're distributing 5% distributions based on your investment amount. And so there will be a time where that might change to being the updated value price. And we haven't got to that point yet. And so I need to kind of think about that. I don't know if Heidi, if you have a different answer, because I don't want to give something wrong, but
well, the best thing to say is we have to get back to you on it. Honestly.
Yeah, I think
that's a good question.
The right answer.
Yeah, because there's going to be appreciation in value, and then how that gets returned. But that's why the properties appreciate.
It will certainly happen at some point down the road, where it would be on the value of the share. But as we're raising capital for the REIT for the first few years, the par price, $100, is what we're working on today. So we can get back with more specific answers.
Greg wants to know if there's a discount for investors at Route 66 for going and staying.
We haven't set one up, but maybe we will, because it's come up a little bit. I wouldn't say it's going to be a huge discount, because we also need to raise income there and have good revenue.
Money for those
But
distributions.
what do you think? Maybe 10 or 15% discount for investors might.
I can tell you that, for example, I've got my little Airbnb in Flagstaff that I don't get to use personally very often. I have friends that are always saying, "Can I go up there?" And I go, "Let me look at the calendar." And usually what dictates that is there's nothing available.
Right. Yeah,
but if we can figure something out, we want to incentivize people to use it, and we'd love to have your feedback on it. But honestly, the way the Flagstaff's going right now, and Jamison alluded to it, it is a tight market. So we delivered our first bunch of units to our manager company. We got our first guest that was staying with us. We talked about that. If we can figure out how to make it work, absolutely.
This one's kind of an easy one, but I do love it. I have a lot of money sitting in my profile dashboard. What can I do with that?
Yeah, that's a good thing, and you should do something with it. Everyone who's listening can invest in NB REIT. If you've already maxed out that investment, so you have a certain amount that the government SEC says you can invest there. If you've already maxed that out, then you might have to have it sit there for a little bit longer. If you're an Arizona resident, you can invest in Venture on 17th. And so if you don't know what to do with it, let's reach out to your account manager, your investor relations manager, Heather, and she can walk you through your options.
Well, and if the question is, are we finding other properties to invest in? The answer is absolutely. Every day we're talking about other projects we're looking at.
Yeah.
Yep.
Another question here. Will Venture on Broadway be acquired by the REIT?
Short answer is no. The REIT is only multifamily properties. We did expect that we might do more retail properties at the time. And this was when we purchased Broadway early COVID. I think it was early 2020. When we were looking at it, we thought we might do some more, but the retail market really starting to tighten up, and there weren't deals, there weren't opportunities that we thought might come along our way. And we looked at several. We were excited about what they might want to do. Yeah,
we were really close on a couple of them.
Yeah, but we're also very picky and very we go back and forth a lot, and unless we have a high level of confidence, we don't do it.
Yeah. So Jamison said it best. The REIT, by its charter, cannot invest in anything but multifamily.
Yeah.
So that's a short answer. And as far as the property itself, really, that property was designed from our purchase to take it to where it is now and to the next step, and to sell it to somebody who wants to buy a long-term, steady cash flow, triple net investment, whether it's the whole property or splitting it up and selling it.
Yeah, so we'll sell that to someone else.
Another question here. I'm trying to convince my children to use their tax returns to invest. Do you have any material you recommend them researching or watching about the company to help them find out more?
I think they should listen to our podcast.
Yeah.
So we try to have some fun with the podcast, because we know a lot of folks who are a bit more seasoned and they're working professionally and they're maybe closer to retirement. They get it more, but it's kind of hard to get some of the younger folks engaged in investing. And so we try to have fun with our podcast. The name is called Kiss My Assets. So if that's not fun, so the podcast is actually great because we talk to younger folks who are starting to invest, why they decided to. We talk to some more seasoned folks who've been investing a long time and talk about why they like real estate and other investments they like. So, you have to talk to younger folks in the right way, but I think the podcast is really fun. And the podcast is also available on YouTube. So you can listen to it in your car on any of the podcast platforms, Apple, Google. But a lot of people actually watch it and listen to it over YouTube, and then they can see us, and also it's visual that way. So I would start there. If you give an investment book to a lot of younger people, they're excited to get it, but
something as simple as like Rich Dad Poor Dad from Robert Kiyosaki, who lives here in town. Something as simple as that for them to understand how this all works and how real estate compounds and how it becomes. It's such a solid, strong investment, especially in an inflationary market. So.
Yeah, I read that book when I was 19, 20. My older brother gave it to me, and it totally shifted my mindset. And then, some of these other materials that we put out are more specific to what we do in multifamily, but it really starts with a mindset shift. And
right.
And it doesn't matter where you're at as far as income. You can start saving some money and just starting with a little bit and start putting it away. And then you can even just say, out of every paycheck, I'm going to save $50 and invest $100 a month into the REIT. It might not be a lot, but it's more about the mindset and the momentum that somebody can create. So we have a lot of fun with that, and we're starting to see more people do that in our REIT. And so we hope that works, and we're going to keep putting out this content to talk to the younger crowd too.
Fabulous. Okay, our last question here. As a Canadian, I would like to invest. Am I able to?
Short answer is maybe. Connect with Heather in Investor Relations. We have a few questions we need to ask you. So short answer is maybe. I would lean on the very, very positive side of that. But there are some qualifications. All U.S. residents can certainly invest, and then there are some other stipulations around that. But in the REIT specifically is a maybe.
Wonderful. Well, John and Jamison, thank you guys so much.
Look forward to seeing everyone next time.
Yeah, thank you guys for watching.